This is the dispute that saw U.S. President Donald Trump first announce higher tariffs on Chinese steel and aluminium before adding many other products, creating an all-out trade war. China is America's biggest trading partner and exports over $500 billion worth of goods to the U.S. So far, Washington has threatened to slap tariffs on Chinese goods worth around $250 billion. China retaliating, albeit to a smaller scale, because the U.S. exports fewer goods to the country. It said it could impose extra duties on goods worth $110 billion. The two countries declared a 90-day ceasefire last month. The pressure's on to resolve the dispute before that truce expires end of March. Few think that is achievable.
The US and Chinese representatives will need one key quality, staying power. These trade negotiations are set to be long and difficult. Nonetheless, there's real hope that the trade conflict may finally be brought to an end. China has already opted to ease tensions by lifting its ban on imports of US soybeans and suspending extra tariffs on American cars. Business leaders are expressing cautious optimism.
We're seeing an acceleration of many of the policies that China's committed to implementing to fall within this 90-day negotiating period, indicating that at least China is making signals to show that there is opportunity for progress here.
With tumbling markets, pressure from agriculture and from industry, the conflict is clearly making itself felt in the US. The latest example being Apple's revised outlook over falling sales. We've been convinced since the beginning that friction between China and the US is not a good situation for either country, or indeed for the world economy as a whole. China has confidence, on the basis of mutual respect and equality, that it will be possible to resolve the bilateral trade dispute. China is suffering too as a result of the conflict. Higher import prices and reduced exports are weakening economic growth. Both sides are feeling the pressure.
Let's talk about the trade talks with Stephen Beardsley. Stephen, how critical is it that a resolution be found soon?
Ben, I think it's getting more critical, as we've seen with the stock market gyrating up and down. We know that investors are already nervous about slowing global growth. That doesn't really have much to do with this trade dispute, but that's in the background. And they're seeing that and they're saying everything's already slowing down. And then what is this going to bring? We know that really in the last 2 quarters, the trade dispute has really hit bottom lines for companies. And they've been sending up red flags more and more and saying, hey, this is cutting into our revenues. And so there is more of an urgency behind this.
So how do we get a resolution?
Well, traditionally, you would get a resolution the same way any two negotiating sides get it, by concessions and by de-escalation. Of course, with anything involving President Trump, it's non-traditional, right? He's very impulsive. Sometimes form and image and optics matters more than substance. So it's hard to really say which way it could go. We know that at the heart of the U.S. complaint are 2 issues. One is the trade imbalance. The other is technology transfers, which is code for IP theft, intellectual property theft from China. And so any efforts to resolve those would be wins in his book, but they could be complicated.
So you can't really escalate this whole trade war. You can only de-escalate it. But who's in a position to do that? Because the US, obviously, as far as trade volumes go, is in a stronger position and has more leverage. But China, at the same time, is going to overtake the US economy at some stage, which I'm guessing the US is quite worried about.
Well, I mean, to be honest, you could escalate this further, right? Because there was a large amount of these tariffs that were supposed to go up to 25% on the American side, and that's been delayed. So there is that in the back pocket. But yes, both sides have leverage over the other. I mean, China's economy has been so built around exports that it's really getting hit hard right now. It's seeing that without the domestic consumption that it needs to be able to fill in for this, that it's really suffering. On the American side, there are major corporations like Apple, like Boeing, like Caterpillar that do a lot of business in China. Which are hurting, and they're also very politically connected. They're big businesses. They employ a lot of people, so they can raise alarms as well.
So this goes way beyond soybeans and intellectual property.
Right, for sure. I mean, this gets into a larger narrative of, as you said, China's emergence as a real economic threat to the traditional West, which is something that's not just hitting the U.S., but also the EU. The problem is, with these tariffs, the U.S. has really isolated itself. And again, what we see with the Chinese economy is what's really been sort of a superficial or maybe sort of a one-sided plan around exports. And now it's being it's paying for it.
Stephen Beardsley, thank you very much for coming in. Tesla reached a milestone today as it broke ground on its first overseas production line in Shanghai. The new gigafactory will allow it to sell directly into the coveted market and steer clear of the China-US trade dispute. Tesla says it's also exempt from the requirement that foreign companies form joint ventures with local firms.
$7.3 billion. That's how much Tesla is investing in its new China factory. It would be Shanghai's biggest foreign manufacturing project ever. And it's a coup for Tesla. Many foreign car makers export into China and pay tariffs, which is trickier these days with the trade dispute. Tesla also believes China is the perfect market.
It's very important that the world transition to sustainable transport and sustainable energy generation. So solar, battery storage, and electric vehicles. And China has been a world leader in that transition. So we look forward to helping accelerate that transition along with other electric car companies in China.
Tesla needs the good news, too. 2018 was a difficult year with a regulator crackdown, questions over leadership, and missed production goals.